Standing by here with us is Dan Varroney. Dan is the founder and CEO of Potomac Core. As we just heard in the story there, Dan, the BLS reported the job growth while also revising last year's numbers far lower. Do you think this month's surge reflects real economic momentum?
I think it absolutely does. And I think that what we heard in these numbers was that Main Street has hit the gas. Washington needs to stop tapping the brakes. I think that's what we heard. And I think what I mean by that is that small businesses coming back strong. We saw the construction numbers very strong. They're strong because in the president's new big, beautiful law, there's 100% expensing for both equipment and plants. So construction is underway. We also learned today that 170,000 private sector jobs were created. How's that for a big win for Main Street? What that says to me is that small business is poised to lead what will be not only a strong jobs recovery, but a very strong economic recovery.
You know, Dan, I'm reading here, with the revisions accounted for, the labor market added only 181,000 jobs total in 2025. That would mean about 15,000 jobs per month last year. Are revisions of this scale normal?
So I think a few things. I want to give everyone some very quick historical context. When you look at the prior administration adding $1.4 trillion in regulations, raising taxes, adding spending of $7 trillion, essentially what we did is we choked the economy to a steady halt. And what that did is it caused job creation to cease. So what we have now with lower, less stringent regulatory policies, better focus on permitting and giving companies more expedited permitting, more favorable tax policies for investment, we are reprivatizing the private economy. And what we see right now is the economy poised to take off. And I am highly confident that come the second, third, and fourth quarters, this economy is going to be humming along.
You know, a decline of 34,000 federal jobs was reported for January. Do we know if those drops were reflex of policy-driven cuts, or are those temporary factors?
So I think that there has been an effort by the Trump administration to focus on reprioritizing the U.S. economy. And what that means is that let's focus on government and government jobs, take that investment, put it in the private sector, let them create jobs. For example, put it into small business, right? When you look at the new big, beautiful law, 2 of 3 new jobs come from small business. 99.9% of the companies are small businesses. What this means is that the administration is focusing and making Main Street a priority. That's why we had 170,000 new private sector jobs created. I think this is an exciting and dynamic time. And I think that for everyone watching tonight and everyone moving forward, we are in a much better place, headed in a much more favorable direction.
You know, I was looking at some of the breakdowns of the specific industries and how specific industries were impacted by the January gains. I read that healthcare led the gains, 82,000 jobs in the healthcare sector. What does that tell us about where employers are focusing their hiring efforts right now?
So let's look at this as a demographic issue. Many of us are getting older. So you look at the boomers getting close to retirement, if not in retirement, and healthcare needs are increasing. So I think that makes perfect sense. When you look at the healthcare situation, I think that doesn't trouble me at all. Actually, I'm far more energized by the increase in the construction jobs. And I expect that the next time we talk next month and the month after that, we're going to be talking about manufacturing jobs being created.
So how much should regional variation matter to viewers? Are certain parts of the country seeing stronger gains than others?
So I think that regional variation is always an interesting point. But here's what I would say to you. When you have 170,000 private sector jobs being created, that says to me that growth is fairly widespread. However, what I would say to you is that there are states that we know as the red states that have less stringent regulatory policies, more favored policies towards small businesses, On the tax side, those states are clearly doing better. States like Alabama, Florida, Tennessee, Texas, their economies are just booming.
You know, average hourly earnings, as we heard in that report, average hourly earnings rose 0.4% in January. They're up 3.7% year over year. Is that wage growth strong enough to support consumer spending without reigniting inflation?
Great question. Here's what I would say to you. First and foremost, the consumer price index number comes out on Friday. I believe that number will come in lower, probably in the 2.5%, which would be great news. But I'm saying that because if wages are up 4%, that says that wages are outpacing inflation. This administration had a priority of creating a wage scenario whereby workers could earn enough money, not just to pay bills, but to do better than that. And what that says to me, there are more hours being worked, there are more wages being earned. This is all very good news and another sign that the economy is in takeoff posture.
Dan, good to see you. Thanks.
Good to see you.